Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. And boy, what a difference a day makes. Friday, a lot of selling pressure across the board in the grain markets following that WASDE report, which sent traders for the exit door, supposedly. And then today, buyers stepping back in on that dip. Go over the closing prices here. December corn futures up 4.5 cents, 4.34 3/4. Important to note that with December option expiration this week, a lot of that volume starting to rotate and shift out to that March contract, which finished 4 cents higher to 4.48. January soybean futures up a whopping 32 3/4 cents, 11.57 1/4. And over on the Chicago wheat side of things, we saw Dees Chicago wheat 17 cents higher to 5.44 1/4. Light corn, a lot of that volume shifting out to the March contract, which also tacked on 17 cents, settling at 5.58 1/2. Now, over on the livestock side of things, mostly green with the exception of lean hogs. December live cattle futures up $2.12, 221.27. In line with volume is the February contract up 2 1/4, 221.77. Feeder cattle January contract up 5.72 to 326.27. And on the snout side, again, December tacked on 7 cents. February tacked on 5 cents. In the following 2 months, slightly lower on the session. Now that we got those closing prices out of the way, we can get into today's charts. And we kind of talked about this on Friday, pulling back to that 20-day moving average, 430 1/2. We tripped stops below there on the Sunday night trade, a little bit of weakness to start things off, but buyers were stepped in, ready, willing, and able, and we tried to get out above the 200-day, which we outlined in this morning's report, but just kind of fell flat. All in all, this market looks pretty neutral right now. We still have the higher lows intact, but potentially lower highs are in the making. I think one of the things that concerns me about today's price action is the fact that we saw soybeans up 30+ cents, wheat up 17 cents, and corn was only able to tack on 4 cents. Without that strength in the soybeans and wheat market, I think it would have been tough for corn to post a positive session. But all in all, I think we settle into a little bit of a consolidation here, especially if the rallies in soybeans and wheat maybe run out of momentum, not necessarily a top, but at least stall out, or if there's a reversion trade on that front, that could spill into weakness in corn. All in all, continue to think that we can stair step higher. It's just what's that catalyst going to be going forward. Export inspections this morning, very, very strong for the corn market. So there is still a fundamental backdrop. It's just, are we going to accelerate to the upside? That's the big question. Can we go higher? Yes, but can we accelerate? I guess to be determined. Now, over on the soybean side of things, what a difference a day makes. A lot of weakness on Friday, and like we talked about in Friday's video, that WASDE report was not bearish. Yield estimates, ending stocks in the U.S., world ending stocks, all below the average analyst estimate. So bullish tailwinds there. What was bearish was the fact that we didn't get any flash sales really from China, or nowhere close to what market participants were expecting. However, we also mentioned in Friday's video that this administration knows how to work headlines. They're going to use that to their advantage and try to jawbone optimism, and that's really what we got, which I think helped spur optimism in today's price action. On top of that, we had very, very strong NOPA crush numbers, so some positive developments on that end outside of the lack of flash sales from China. Technically, probably a little bit overextended here, but price, again, is king and is telling you something. The bulls have clear control of this chart, and if you zoom out and look at the weekly chart, there's quite a bit of error still in this market. I mean, there's really, you get back towards $12, that's technically and psychologically significant, so that would be the next upward level from here. If we do set back a little bit, the support pockets that you're going to want to keep an eye on, again, that 20-day moving average and the low end of this recent range near 1110. Break and close below there, and that probably flips the script and turns their tide back a little bit more bearish from the technical standpoint. But for now, the bulls in firm control of this chart. Now, over on the wheat side of things, very, very choppy. Saw a big reversal lower on Friday, closed at the low end of the range. Today, opened at the low end, closed at the high end. That's very constructive. We know that things are picking up over in the Black Sea. I think there's probably still some underpriced risk that continues to be a catalyst. We know that the world ending stocks are still high. That's been weighing on the market for some time, but it certainly seems like there is more at work here in this grain trade, not just the wheat market, but all the grains kind of working together. And if you look at a lot of other markets too, it's almost like a rotation out of things that have been working and into things that haven't been working, or things that are underpriced, which has been the grain complex for the bulk of the year. So I think there's a lot of optimism in terms of money flow there, but we need to see some good technical closes to really reignite this upward trend here in the wheat market. And that first big hurdle from here, 553, 555. Above that, you're looking at trendline resistance, 560, and then the 200-day moving average, 63. Above there, and then that's when I think you could potentially get a move like we've seen in soybeans. It really gets people a little bit more excited in terms of trend followers. Now, over to the livestock side of things. Live cattle, December, tested and held the 200-day moving average on Friday. We're able to defend that today. The cash trade, 225 at the end of last week. So again, as mentioned on RFD TV this morning, I think we can continue to work back higher towards 225, but that's going to be the big inflection point for the market. That's where we broke down from on Thursday. We continue to mark lower highs and lower lows, so that would be a lower high. And we've got moving averages continuing to downward slope, with the 20-day coming at 228.32 and continuing to decline very rapidly. So unless we get a breakout in the cash market, I think we post another lower high. So again, I think these relief rallies in live cattle and feeder cattle, probably opportunities for hedgers to look at some downside protection. Speaking of feeder cattle, we'll jump over there. Similar type of setup, tested and held the 200-day, which really just populated on the chart last week. Where we go from here, a lot of resistance up here, 333, 335. Failure to get out above there, I think, marks another lower high, and we could potentially continue to work lower in this market. I think fund liquidation could continue to be a trend in that front. If we don't really break down, potentially just consolidate here. As you can see over the last couple of weeks, you look 330 and give or take, $10. That's basically what we're at. And $10, you say that's a lot, but as you can see, it hardly looks like a blip on the chart. So again, position sizing and risk management continuing to be paramount in the feeder cattle complex, and it's very thin, very choppy, so be careful out there. Then over on the lean hog side of things, just a ho-hum day. Not a lot going on there, as mentioned in those closing prices, a mixed session there. Crude oil smack dab in the middle of the range, right on the 20-day moving average. I'm still optimistic on that market. As mentioned with wheat, a lot of, I think, geopolitical risks are underpriced, so I wouldn't be surprised to see some upward momentum, or at least that's what I'm hoping for. With the underpriced geopolitical risk, if we get out above the 50-day moving average and top into this range near 61, I think that's when things could get a little bit more exciting from the technical front. And last but certainly not least, silver, marking a potential pretty textbook double top at the end of last week's trade. And now we're on the verge of collapsing back down towards the recent low end of the range, 46. Break and close below there opens the door for additional liquidation. So if you're not if you're new to silver trading, know that this market can really get moving really fast. It's kind of like the feeder cattle of the metals market. So tread lightly. Options could be a good way to play this if you're looking for more of a pullback and the double top playing out over time. We've been working with clients in January and February options in that case. If you've got any questions about that, don't hesitate to reach out. And I guess that pretty much sums it up for today. If you do have any questions at all, don't hesitate to reach out to our trade desk. We are ready, willing, and able to help. And again, if you have not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com and select the markets that you are most interested in, and we'll deliver that information to your email daily. That's it. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.